Should I buy Alumni life insurance? Welcome to Question An Actuary, where you get help achieving sustainable financial independence by harnessing the power of life and health insurance. I'm Pramod Sharma, and this is episode number 3. Question: should I buy Alumni life insurance? Answer: let's first look at where you can buy insurance and then compare prices. When you're looking for life or health insurance, you may not know where to start. You'll likely belong to an alumni group as an alumnus from a college or university, or as a member of a professional association, or as a customer of a retailer. If you do, count on getting ads from them. Insurance companies sell through different channels, including affinity partners. Insurance companies need money to cover expenses, claims, and profits. One of the biggest expenses is finding clients. They have options like advertising to get customers directly, paying independent advisors to find buyers, or paying gatekeepers, i.e. affinity groups, for access to their members. When insurers don't get direct access to you, they must appease the intermediary first. Selling through different channels creates conflicts. If an insurer sells better products at lower prices direct, will they get any business from other channels? How can insurers expand via distribution through competing channels without losing sales overall? The solution is to make compromises. They offer different products through different channels. The most competition is for independent advisors because they're independent and shop around. They tend to get more products and stronger guarantees. Let's look at affinity groups. They negotiate with different insurers and decide what's best, but for who? There's a conflict. The group could get you the lowest prices and make the least money, or get street prices and make more money, or maybe something in between. You are not involved. There are advantages to buying through an affinity group. Pre-screening. You're only offered selected choices. Revenue for the affinity group. Convenience. You don't need to look for an advisor. Subsidies. Premium rates tend to be pooled based on age and smoking status. If you're less healthy and qualify, more healthy people are subsidizing you. There are disadvantages too. Lack of choice. You only get limited products. Often the most useful are excluded, like long-term care insurance and permanent life insurance. Coverage amounts tend to be limited also. Lack of competition. You only get products from one insurer. Since they paid to get access to you, they want to make their money back from you. Lack of personalization. If you like buying off the shelf, you may not care. If you want customization, you're stuck. If you want to know what other insurers offer, who will help you? Higher prices. There's often no medical underwriting to measure your specific insurability. You're pooled with others. If you're healthy, you're subsidizing the extra claims from the unhealthy. Lack of guarantees. The rates can increase. Sometimes you get a refund, but that's only because you were overcharged before. And the terms and conditions can change, as they do with your car and home insurance at each renewal. Limitations. Coverage may end before your needs end. You may not be able to get rates that stay level. You may not be able to convert to permanent coverage or buy private coverage if you're less healthy now. Let's compare term life premiums for a male non-smoker born in the summer of 1969, which makes him 45 now. We'll look at affinity plans for alumni, associations, and stores. We'll look at term 10 premiums from an independent advisor too. Most examples use Manulife Financial because they provide good information online. Results would be similar with other insurers. Let's look at the comparisons now. Let's look at what's offered here. The affinity partners are alumni, professional associations, and retail associations. We'll look at alumni. Here are the types of products available. The asterisk beside health and dental and critical illness insurance means those products may not be available through your college or university. You'll also notice that certain products are not available whatsoever. Where is permanent life insurance and long-term care insurance? Let's explore our example starting with Costco. When you go to their link, they say you are no longer on their website, You are now subject to the privacy policies of the company hosting the insurance site. Let's look at what the rates would be if you are an executive member. The coverage amount is $525,000. Costco offers a wide range of protection starting at $50,000 and going up to $750,000. The reason we're not picking $500,000 is because some of the other affinity groups have restrictions and only let you get $525,000. That makes them a little more money. We put in the date of birth. Our person is 45 years old, a male non-smoker. The premium is $71.25. There are no disclaimers or other conditions shown. We'll see that in some situations, premium taxes are extra. Costco tends to eliminate surprises like that. If the person were a regular member, the total premium is $75.03. Let's look at another retailer. This one is London Drugs. We put in the same information. Here we find the premium is $108.68 a month. That's more than Costco. Let's see what the conditions are here. The coverage can be up to $1 million. That's more than the $750,000 at Costco. The definition of non-smoker is shown. There is a discount because we're buying more than $250,000 of insurance. A premium of $108.68 is what we get. Let's look at an alumni association. The first one is for alumni of Acadia University. The premium is $101.25. What else can apply here? Let's take a look. It says the premium rates may change on the policy anniversary as of October 1st, and provincial taxes may apply. What's your guess? Do you think taxes will apply or not? If they may apply, can they please show us the premium after taxes? That's one place, Acadia University. Let's look at another one. This is OCAD University. If you didn't notice much difference between this page and the previous one, don't be surprised. What you're seeing is basically the same website and the premium is exactly the same, $101.25. Let's look at the University of Toronto. Same price, and finally York University, the very same price. If you are a university alumnus, where you went doesn't seem to matter. You'll end up paying the same premium. What if you belong to a professional organization? Let's say you're an engineer. What's the premium then? Here we've got the same information. We've got a wider range of coverage from $25,000 all the way up to $1 million. From $25,000 all the way up to $1.5 million. That's better than the previous options. We'll use our same $525,000 death benefit. Even though we put in the same date of birth, the age is shown as 44 instead of 45. For this association, age is being calculated in a different way. Maybe that's a reason why the premium is less. It's $98.15. Again, provincial taxes may apply. My guess is they will. It would be really nice to see the results with them included, but we cannot choose that option. What happens if you buy private insurance? We're using the same information as before, but now we're looking at Term 10 life insurance. We have a lot more choice. When we look at individual insurance. Term 10 is a common choice, and we'll use that. Let's look at an online quote. What do we see? We're dealing with a 45-year-old. The cheapest premium is $50.81, which includes premium tax. That's about half the cost of an alumni plan. Surprised? The price is for a non-smoker. If we scroll down to Manulife, here they are. They charge $54.54 if you're buying Family Term 10 and are a healthy non-smoker. Let's explore Manulife in more detail. We input the information into their projection tools. The date of birth, the age is 45. We're using Health Style 3, which means a standard non-smoker. Term 10, $525,000. Monthly premiums. We get the same premium in essence, $54.53. We could switch to Term 20, which would mean the same premium for a 20-year period. That would take our 45-year-old all the way up to age 65. Now the premium is $92.28 and guaranteed, still cheaper than an alumni plan. Let's go back to term 10. What happens if this person is healthier than usual? If they're in the best category, the premium drops to $41.52. In the worst category, number 5, the premium becomes $134.37. You can see there's quite a range. Supporting an affinity group is a great idea. Is buying insurance the best way? You could buy elsewhere and donate the savings. You now get tax deductions. Should you buy Alumni life insurance? What do you think? Share your thoughts and ask your questions below this video. For private personal attention in Toronto, reserve time to learn about life.